Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are analyzing two articles about SoFi Technologies' SoFi stock. The first article is titled, 3 Things You Need to Know If You Buy SoFi Today, and then the last article we're going to be analyzing is titled, Prediction, 3 Stocks That Could Trounce the Market. So the first article is going to go over the latest news updates for SoFi Technologies, and then the second article is going to be about the best stocks to buy right now, including SoFi Technologies. With that being said, don't forget to go and annihilate that like button right now. Subscribe if you are new. Comment your thoughts down below about where you see the SoFi share price going in the future. Don't forget to become a member of this channel. And with all of that being said, let's dive straight into today's stories. SoFi Technologies, as you know, is a fintech company or a financial technology company that essentially operates as a digital bank. And in the third month period ended September 30th, SoFi Technologies posted a 27% growth rate in revenue and a 47% rise in their overall member base. And we also need to keep in mind that their leadership increased their overall guidance for the full year. So if this fintech is on your radar for businesses to potentially buy, you want to first understand these 3 things. First, let's talk about the growth in their personal loans. Since the start of 2022, SoFi Technologies has generated an astounding amount of personal loans. In fact, to put this into perspective, over the last 7 quarters, the company has approved $20 billion worth of personal loans compared to just $4.1 billion worth of student loans. To put this even into more perspective, this company originally was a student loan refinancer and not a personal loan giver. So SoFi Technologies' other revenue segments are increasing very rapidly. We also saw that on the recent earnings call, management pointed to how these borrowers have strong credit scores and high annual incomes. And the reason they wanted to reiterate that is because these are unsecured personal loans, meaning that if these borrowers decide not to pay back these loans, SoFi will be floating the bill for this. Luckily, SoFi's management again calmed investors' nerves by saying that these borrowers have very high credit scores and very high annual incomes, so they can afford to pay on their loans. So investors shouldn't worry just yet. But what investors should be looking forward to is their performance over the upcoming quarters. Right now, SoFi's share price trades at $6.57, while very bullish analysts believe this company could surge up to $12 over the next 12 months. One of the reasons for this is because they are approaching GAAP profitability. Most high-growth businesses like SoFi Technologies and other fintech companies are not close to achieving profitability, at least on a GAAP or a generally accepted accounting principles basis. On the other hand, SoFi is uniquely positioned to achieve GAAP profitability. According to their leadership team, led by their CEO, Anthony Noto, they said that the company will produce a positive profit under a GAAP basis in the current quarter, meaning the current quarter we are in right now. That means this company is anticipated to post GAAP profitability in their next earnings report that is coming up. So obviously, the future hope is for SoFi Technologies to continuously produce profits for their shareholders. And in turn, this should lift the overall share price as more investors flood into this company due to the good news. If SoFi Technologies is able to sustain the GAAP profitability while at the same time continuously growing their revenue, which is their top of the line, investors should be very excited about this. But there are risks for this company. For instance, let's just identify one right here. Let's talk about their intense competition. SoFi Technologies has clearly found a remarkable niche within the financial industry overall, and that is due to their digital-first approach, their technology, and their seamless user experience thanks to their all-in-one inclusive app. Even so, the competitive landscape for financial technology companies, or even finance companies in general, is very high, because SoFi is rubbing shoulders against industry giants such as JP Morgan Chase as well as Bank of America, who have been very successful for very long periods of time. I personally own all 3 of these companies, but they're also rubbing shoulders against more niche providers such as Block's Cash App as well as Robinhood Markets, which either directly or indirectly compete with SoFi Technologies in one way or another. So the competition is absolutely fierce, but with SoFi continuously gaining more and more members, this is proving very impressive for this company because it means that SoFi Technologies is not only attracting customers, but also stealing customers from other banking institutions. And this means that SoFi Technologies, to maintain competitive, will have to consistently increase their game and attract more and more customers to keep investors happy. And according to their earnings reports, they are doing just that. So now let's talk about 3 stocks that could absolutely surge, starting with none other than SoFi stock, to where analysts believe that SoFi's top of the line will grow by 33% for the year of 2023, and then another 25% for the year of 2024, and these are very aggressive growth metrics, which is fantastic news for investors. Next year's revenue growth should be enough to push the company out of the red and into the black, meaning that this company is not only going to become profitable, but their share price is anticipated to explode during this time period, and that is a big bullish milestone that we would want this company to achieve. Next, let's talk about Taiwan semiconductor manufacturing. If you think that companies like AMD, known as Advanced Micro Devices, Broadcom, or Qualcomm, make their own chips because these are semiconductor companies, then you would be wrong. The majority of the time, companies like these outsource to a third-party manufacturer like Taiwan Semiconductor Manufacturing, ticker symbol TSM. And of course, this makes financial sense, because why would these companies want to make these in-house when it's more expensive, when another company can make it cheaper for them at higher volumes, even if the institution that they are outsourcing to is making semiconductors for competing companies. So companies like AMD, Broadcom, and Qualcomm use companies like Taiwan Semiconductor Manufacturing to make their chips, even though Taiwan Semiconductor is making chips for their competition as well. Right now, TSM stock trades for approximately $100 per share, while analysts believe it could surge up to $130, meaning that investors could get a huge payday from this. However, we are seeing that many US chip makers are building their production foundries in other parts of the world to become less reliant on third-party outsourcing and companies like Taiwan Semiconductor Manufacturing. For instance, Intel is committing more than $20 billion to establish their own production facility in Ohio. And to quote straight from the article, even with this strategic shift, the need for third-party manufacturers is not going to go anywhere anytime soon. There are plans to turn Arizona into a chip-making hub, and they are being led by none other than Taiwan Semiconductor Manufacturing, which is spending billions of its own dollars to build a production facility there. We also see that Apple has already committed to purchasing silicon made by Taiwan Semiconductor at this site, even though it's at least a year away from actually being completed. So there is some risk there, but the biggest risk is more of a geopolitical risk, because if China ends up attacking Taiwan, this could be catastrophic for this stock. Lastly, let's talk about EPR Properties. And EPR Properties, ticker symbol EPR, is a real estate investment trust, also known as a REIT, which are tax-advantaged vehicles for owning rental real estate. A lot of investors like investing into REITs because of their amazing dividends, which are pretty beefy. With a current yield of around 7.3%, you would struggle to find a company or a stock with a higher yield based on their very reliable dividend. We also know that dividends are extremely important because according to Standard & Poor's estimates, ever since 1926, dividends have driven nearly 1/3 of the S&P 500's total returns, meaning that this 7% dividend could be amazing for investors looking for passive income and a phenomenal investment. But there's also capital appreciation and stock price appreciation to look forward to in this company. Their current share price is $45.19, while analysts believe it should actually be worth around $51. So if you were to invest now, not only are you getting this company at a good price, and it has an amazingly strong dividend yield of over 7%, the company's share price could also appreciate up to $51. So you are making money in 3 different ways here, and you are also getting a phenomenal deal, which is why EPR Properties is an amazing investment. There is also other key upsides in regards to REITs businesses. For instance, EPR Properties focuses more on entertainment venues like movie theaters, casinos, virtual golfing, beachfront resorts, skiing resorts, gyms, water parks, indoor skydiving, museums, and many others. The company also has a competitive advantage because of its so-called triple net leases, which means it's the tenant rather than the landlord who's responsible for costs like taxes, insurance, maintenance, and other things. So this is a phenomenal business model to have, and this is a great company to hold in your personal portfolio. Such agreements remove a lot of risk involved with REITs and real estate investment trusts, which gives this company a huge competitive advantage compared to other REITs that do not practice triple net net leases. Overall, EPR Properties pays its dividend on a monthly basis rather than a quarterly basis. So you are collecting these cash payments sooner than you would a stock that only pays a quarterly dividend, which allows you to put your money to work even sooner than compared to other dividend stocks and other real estate investment trusts. So overall, I would love to hear your thoughts about EPR Properties, Taiwan Semiconductor Manufacturing, as well as SoFi Technologies. Don't forget to go and annihilate that like button for more videos just like this one. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. And with all of that being said, I will see you in the next YT video.